What's up everybody, Tom here with another video. In today's video, we're discussing the latest stock market news that's going to be affecting the markets this week. We'll also be discussing our technical analysis levels for the S&P 500, Nasdaq, Bitcoin, Ethereum, XRP, gold, and US dollar in what's set to be a very interesting week of volatility throughout not only the stock markets, but also cryptocurrencies. Are we seeing a recovery yet in crypto markets? Let's talk about that and more together right now. Stay tuned. So as we always like to do, let's take a look at some heat maps of what's going on in the markets right now together. One of the things we like to do is have a look at how things are performing and how things are performing over the last week. Well, we'll be talking about cryptocurrencies more in just a few moments, but you can see here the recovery over the Thanksgiving long weekend is being pretty big. And in terms of movements on Bitcoin, Ethereum, XRP, and more, they're all up a huge percentage. XRP now up actually 14.79% in trade today. If we take a look at the market and the last week of performance, it's still clear that things like the financial markets and of course energy in terms of the large cap companies have been outperforming a lot of the others. And actually Apple has been pretty much one of the more underperforming levels of the FANG stocks. It might be worthwhile actually looking at Apple soon, and we'll be doing so in our live analysis during the Monday before opening session. So come and join us if you think that might be of interest to you. Let's take a look now at the broader markets for the week of returns before we get into the technical analysis. And that was that we saw a generally steady increase near the end of the week. And it's pretty normal for us to see this in Thanksgiving week. Remember, Thanksgiving week has a heavy bias towards a positive correlation, especially over the last couple of years. What's interesting though, that this Thanksgiving week is different to others when we look at sectors. What drove this week? Well, actually energy did the best. Then we had the financial sector, and usually it's XLY, it's consumer discretionary, that's doing the best here. And it just wasn't doing as much this year. And that's because I think concerns over the current situation with, of course, brick and mortar stores is still a thing for Wall Street. And we've talked about this a little bit. We're wondering whether consumer discretionary is fairly priced or possibly a little bit overpriced at this time. More to come on the channel over the next couple of weeks on that one. So what about put call ratios in the markets, the broader markets that is? Well, put call ratios actually rose on Friday, 2.19 reading, a very high reading for the S&P 500. When we put in perspective though, if we look at sum of all products, you'll notice there's still a huge amount of volume calls to put ratio. So we've got a lot of people still taking bullish bets on the market. And what's important is when we look at the technical analysis levels in just a few moments at the S&P 500, you'll see why this level is so critical for the bulls and the bears. The bears really need to regain control of the markets right now to stop, I guess what you would say, a runaway market occurring again on current analysis. Let's also talk about Bitcoin daily ranges. So last week we saw a bit of a flash crash in the Thanksgiving Day low liquidity kind of event. And this is very usual in these markets. Remember, there's been huge amounts of days since even 2017 where Bitcoin has gone 10% or even more, upwards of almost 30% in one day. It's often recouped or rebought by retail community after that. And we're seeing that kind of phenomenon play out again right now. So let's begin our technical analysis by talking about the dollar index. And I think the best place to begin here is the weekly chart. Here we've got a close below the 92 support level. This level here was incredibly key, and we've seen it close below that. Now, if we have a look over here on the weekly, we did once get this, where we actually got a close below. Remember, we want to learn a little bit of past history and then understand what happens during that period may happen again. So we did have once a close below, and then it bounced back up, and then of course it came back down and hit that 89. Now that we've got a close below, really what we're looking for is possibly a pullback back to the 92, for 92 to remain or become a resistance level, which was firstly support in what we call roll reversal, and then the market to continue its decline with something like a lightning bolt kind of move where we've got a peak, we've got a trough, and then of course we have a lower peak and a lower trough on the smaller time frames. That will really be a signal that even the conservative entries have respected the level and we're moving on down. This could lead to a huge amount of selling in the US dollar as well. This is clearly a break close below the 92, and it leads to further selling, which could also lead to a bullish stock market if we believe the current correlation between each. If we go to cryptocurrencies, what has this meant for cryptocurrencies? Well, cryptocurrencies have had some very nice little moves here on the 2-hour charts. Here we've got Ethereum. So we talked about how there was buying pressure at that 480 last week, why that was, and then we went through basically the previous levels of resistance becoming support. Ethereum has now broken past this 520 kind of level, and it is closed above, and you can see it's pulling back here on the charts right now. Now, what's going to happen? Let's say the market was to pull back here a little bit, and it pulls back to this 528 level. We're going to have many moving averages on the smaller time frames, the 1 hour, the 4 hour, and the 2 hour here, all acting as dynamic support at this zone. We've clearly also broken through a very important peak over here, which has led to what we would consider pretty much a little double bottom in the direction of trend. So it looks like for now, Ethereum is moving higher, and that's good news for, of course, the Ethereum bulls. If we were to take just this range and extrapolate that out to what we could think maybe this market could go to, that would push it back to at least 564. And I think it's more likely that it goes up to 580, where we had some previous resistance, support, and support. This zone here, the 580, will most likely act as some kind of resistance, and then we'll have to see whether the bears get control of Ethereum again. But things are looking good here for the bulls on this particular pair. XRP, very, very similar. A series of higher lows and, of course, equal peaks. And we've broken through, closed above, and you can see the slingshot effect that happens on cryptocurrencies. Big bull moves come into it. It goes to the next kind of level, being 65, previous resistance over here. And now it might be due for a pullback. So where do we expect it to pull back to? Similar to Ethereum, back into the previous peaks. And when we hit these levels, we get usually moving averages, such as this 1 hour 50 moving average acting as dynamic support. This becomes a great level where bulls regain, and then of course they push it higher, hopefully back into something like the 75 cents. So again, XRP looking pretty bullish here in terms of the charts. Bitcoin, very similar. Daily looks amazing here. Coming off the daily 20 exponential moving average, we have a bullish kind of movement with the wick not holding underneath. We've got another bullish kind of movement in terms of like a little hammer kind of pin bar candle, again with the close being around the 20 exponential, and now a nice big bullish candle at this stage during the daily trade. If we go down to things like the 4 hour as well, very similar to Ethereum. We have a very nice little double bottom here. We have some consolidation where it coils before it breaks out. And now any pullback back down to this level is going to be met by smaller time frame moving averages, of course, previous resistance, and probably a decent amount of buying pressure. Notice around this 17 kind of 5 zone, we had resistance, support, 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 and Bitcoin remains that thing where it goes usually in 500 blocks. It goes and finds resistance at maybe an 18,000, and then of course it goes 18.5, 19, 19.5, those kind of things. So this is a great formation here, and of course the bulls should be pretty confident in at least these initial moves from Bitcoin. These are quite nice technicals in the direction of trend, which is always what you want to be looking for. What about gold though? Well, you would expect gold to be going up. However, it is not. Bullish bets continue to decline on gold. Here we've got the weekly in our top-down analysis, and there's a few things that are looking okay for gold bulls, especially if you're looking at reload zones. We have a 50 exponential moving average, this blue line here, that found support. That's our 1. We have a 50 exponential moving average that found support here for gold. And then we have our final level, which is about to be reached, which is our 50 exponential moving average again on the weekly time frame. This is also right around that 1750 area where we have previous resistance, which should act as support. And now that gold has broken through and closed below that 1800 level, which we knew would be first support, and it was, we expect the next leg to continue on down. So probably down to the 1750, previous resistances, and then hopefully the bulls regain control. It's coming down to that perfect level which was reached before, but gold will continue to be incredibly volatile through the next couple of weeks. these are not small moves. These mean huge amounts of bets are coming out from the bull case, and we need the 1750 to hold from the bull case scenario. This is just such an important level. Let's bring down this line just to show you. 1750, we have previous resistances everywhere. That moving average, which will be something like a 200 SMA on this particular daily if you have it on your charts. And it's just that level where you really hope that the market starts to recover. Another thing that you want to look for is usually things like lightning bolts, little double bottoms, or of course things like bullish hammers or engulfing candles, etc. around this level on significant time frames. You don't want to just grab it because it's like catching the falling knife. What you want to do is, of course, use your analysis to find things that are changing. And that's what we do here, guys, on the channel. We try to use our analysis to get us the best statistical chances possible in the markets. Before we go into the stock markets overall for the week ahead, let's have a look at US oil. So US oil completed our first kind of take profit zone here. We knew it would smash through that previous 43.67 kind of high. That didn't really matter anymore once we got all of this structure formation. We've now reached what was the range of the previous move. So the range over here, ignoring that election day kind of stuff. And it's reached it. We've got a OPEC meeting, I believe, that's going on at the moment. And we may see a decline or possibly a break of this here, but a decline back down. There'll be a lot of buying pressure, of course, around this $42 a barrel for US oil. And we are quite far away now from the daily 20 moving average. Usually the markets like to come back down, have that mean reversion, and then of course move up further in the trend. Longer term, we still think oil is relatively undervalued and it should return back to some kind of stability if we continue to see economic recovery over the next couple of years. It's that medium kind of term investment though. It's not that long-term one. Oil, of course, has many headwinds long term. It's just that it's been deep value up until now, being with Exxon and other stocks so low. I mean, Exxon got down to what, 31, 32. We've been looking at that in our live analysis, just some crazy levels when you put it in perspective of how big Exxon once was. So what about the fear in the markets right now? We'll be going in the S&P 500 and QQQ in just a moment, or the Nasdaq, but basically VIX still hovering around that 21. It broke and didn't close underneath on the most significant time frame, being the daily here. We saw maybe fear coming out of the market, but then all of a sudden it came back and is holding this zone, such an important zone for fear to be holding. Remember, underneath 20 for the VIX means fear is coming out of the market and we're going back to some kind of normality. And this is where we pretty much are now going to be seeing a very critical point in the S&P 500. And then we flick to it and you see why. Previous resistance spike, previous resistance, and now we're closing right around this 36 to 36.50 zone. This area is critical for the market to break through for the bulls. We've got resistance, resistance, resistance. If we get through, we probably then come back down, test from the top down this resistance as support, and then of course continue on. And many people are now calling things like 4,000 over the next 12 months, etc. on the S&P 500. What's a couple of interesting things though? Well, firstly, we've found resistance 3 times. The VIX is at the perfect point. The put-call ratio, while it got higher on Friday, we know that there's generally a cooling effect after Thanksgiving kind of bull run week. We also saw that the Thanksgiving week wasn't run by what it usually is, which is consumer discretionary. So could the bears get back in control here with all of the divergences and things that are going on right now and push this market back down to the 20 exponential on the daily? I think that's definitely a possibility this week, and it's something that I would be setting your alerts for. So something like this 35.40, if we get back down to there, maybe all you get, funnily enough, but this would be a pretty standard pullback to back through support and also a 20 exponential. It usually likes to touch this kind of thing before it moves to the next direction. And we can see that even when it broke through here, it came back to the 20 and then of course continued its way up. The 20 is quite an often touched moving average before the next large move. So definitely look at that this week. If we take a look at the weekly, again, the weekly, while it closed higher, and it definitely closed its all-time kind of high close here on the SPX, the real market, it's still trapped within this range. and we go to something like a 4 hour, and you can see here, we're basically really trapped here with the resistance. It's no clear, very strong breaks. There's definitely some coiling and consolidation here, but I'm not convinced that the market's going any higher just yet. I need to see a close above this area. And then of course, I like to see a pullback, which you generally get. And then I'll be convinced to potentially take some further longs in the market. QQQ, a little bit different. It's already closed above. Look here, 4 hour resistance, and we get a close above here in terms of the tech stocks. So tech stocks coming back into focus very quickly last week, one of the better kind of indices to be in, and certainly the one that was beaten down the most recently since the US election. If we take a look at where the resistances are, we've got 303 as the previous resistance. And right now we're still looking for pullbacks to the 20 potentially, and maybe it just moves up a little bit, comes down, and then of course does the lightning bolt up. I'm going to be looking at S&P 500 as the major indicator of what's going on this week though. I think that QQQ, Nasdaq, Dow, any of those other indices, realistically the strongest signal here is going to be on the S&P, and then you can pick which one you like. If you prefer the Dow companies, they're going to move the same kind of way the S&P does anyway. And of course, if you prefer buying tech stocks, well, if the S&P is showing a bearish signal, the tech stocks will most likely be showing a bearish signal as well. So just remember, S&P should be your main lead, and then these other ones, you're just finding key little zones and levels, and possibly if you see further weakness in those indices or those sectors, then it's worthwhile considering them as well. So hopefully you enjoyed this video today, and if you did, of course, give it a thumbs up. Remember to subscribe and hit the alert button, and we'll be seeing you live Monday before the opening bell. As always, join us. There's many of you out there that do, and we have a great time. Speak to you soon, and of course, as always, make as much money as humanly possible. Thanks everybody. Enjoy the weekend. Bye for now.